Actually, this is a pleasure for me to be here in this big event today to share Indonesia perspective on how we are currently developing and our regulatory framework around our Indonesia digital economy. We are, in this moment, we are having a belief that actually we know that technology continues to evolve on unprecedented pace. So in terms of regulators around the world, we face the same common challenges. On one hand, this digital technology is creating new opportunities. However, though it making financial services becoming more and more efficient, fluent, expanding financial inclusion, enabling entirety, new business models. On the other hand, these innovations also introduce new risks, potent risks. Many happenings, the fraud incidents, the cybersecurity incident, the market volatility, to our consumer protections and our financial integrity as a whole. Therefore, we have other questions that no longer whether these innovations should be regulated or we just let the freedom goes its ways. The real challenges in here is how to develop that regulatory framework can strike the right balance among encouraging innovations, safeguarding market integrity, maintaining financial stability, and the main point is protecting the consumers. Within the next slide, we believe that Indonesia has a very strong and potential market for the growth of digital financial asset. With the population as number 4 country with the biggest population, Indonesia owns around 287 million people. More than half of them belong to digital savvy millennial, or we call it Gen Z generations. Indonesia offers one of the largest digital consumer markets in the region. This is further supported by an internet penetrations rate of nearly 80%, more than 214 million mobile phone users, and around 139 million active social media users. These fundamentals has actually fueled the rapid growth of Indonesia digital economy. According to the Economist SEE 2025 report, which is published by Google, Temasek, and Bain and Company, actually Indonesia digital economy grew by 14% in 2025, reaching approximately $99 billion, and is projected to expand to around $360 billion by 2030. At the same time, government continues to strengthen Indonesia digital transformation agenda. This is actually reflected in our current regulation, improving our position in the World Digital Competitiveness Ranking and the Global Innovative Index, which demonstrate Indonesia growing competitiveness in global digital landscape. Given this strong fundamental, it is not surprising that Indonesia ranked 7th globally in the Global Crypto Adoption Index in 2025. This achievement reflects not only the high level of crypto adoption among Indonesians, but also Indonesia's significant potential to become one of the world's largest leading digital financial asset ecosystem. In the next, we are believing that there are strong fundamentals reflected in the ecosystem of technology today. Indonesia is now home of more than 22 million digital financial asset consumers, with trading volumes reaching 149 trillion rupiah, or approximately $9 billion during the first 5 months of this year, 2026. This tells us that digital financial assets are no longer a niche market. They are becoming more and more increasing important part of Indonesia digital economy. Behind these numbers is actually the growing ecosystem supported by our licensed market participant and market infrastructure regulated by OJK. Today, we have 26 licensed exchanges. Alongside, we have some more prospective market participants that are currently undergoing our licensing process. What equally important is that our ecosystem is supported by our dedicated market infrastructure. This is the one and only in the world. Indonesia have boards, clearinghouse, and custodian as part of the market infrastructure, as well as we have payment service providers and industry associations support the system, serve as a strategic partners in promoting Indonesia industry development and compliance. Together, these institutions form an ecosystem where every participant has distinct role, but all share the same objective to build a market that is transparent, resilient, and trusted, and protecting our consumers. In the next slide, we are recognizing that these developments of Indonesia's significant fundamental transfer, which is the approach by regulating our digital asset. Prior to this, crypto assets still regulated as commodities with the primary objective of ensuring fair and orderly trading. However, as for now, crypto asset becoming increasingly integrated with the broader financial sector, it became clear that this approach of method is no longer valid. Today, crypto assets are regulated as part of digital financial asset under the supervision of Indonesia Financial Service Authority or OJK. This transition actually represents that a broader shift in how we value the role of crypto or digital asset within our financial system. Crypto asset or digital asset are no longer a standalone market. They are increasingly interconnectedness with payment system, investment activities, consumer protection, anti-money laundering, and financial stability. For this reason, OJK regulatory approach extends beyond trading activities itself to the broader interaction between digital asset markets and the financial sector as a whole. The legal foundation to this is the Law Number 4 of 2023 on Financial Sector Development and Strengthening, which are just amended by Law Number 4 of 2026 that launched this June. This law mandates OJK to regulate and supervise financial sector technology, innovation, as well as digital financial asset, including crypto asset. At the operational level, OJK has established a comprehensive regulatory framework through a series of regulations and circular letters covering the operations of digital financial asset trading, the using of the risk-based supervisory cycle, the expansions of the regulatory scope, the implementation of anti-money laundering, and the proliferation financing requirements, as well as our consumer protections. Together, this whole measure provide a greater legal certainty for the market participant while strengthening a supervisory framework that is more integrated, adaptive, and aligned with the continued evolutions of digital financial asset in the broader world. In the next slide, one of the defining features, if I can show, of regulatory framework in Indonesia, again and again we introduce that in Indonesia, we bring together the exchanges, the boards, the clearinghouse, and the custodian, and also supported by market infrastructure, the banking system, payment gateways, each with the clearly defined roles in ensuring a secure and orderly market. Digital financial asset traders serve as the primary interface with the consumer They facilitate the trading activities, onboard customer, and conduct know your customer principle, customer identification and verification, which link directly to our Indonesia Dukcapil, the data for Indonesian citizenship, and have to be accordance with anti-money laundering, counter-terrorism financing, AML, CFT, CPF requirements. The next one is the role of the boards in maintaining market integrity. Within here, there's the boards will operate the trading system, monitoring market activities, and evaluating the eligibility of digital assets, as they will regular launch and put in their website the digital asset that becoming whitelist, then able to be traded in Indonesia. The next one is the role of the clearinghouse. The clearinghouse manage the transaction settlement and the safeguarding of consumer fiat funds. In Indonesia, it's obligatory for all consumers to be able to conduct the activity in the crypto asset or digital asset need to use banking system. So there no exchangers able to accept consumer being cash money. In here, it helped to reduce settlement risk. Meanwhile, the other institution, the custodian, is responsible for safekeeping the consumer digital asset. We provide 30% percentage that 70% of consumer asset must be placed in equivalent in the custodian, and only 30% placed in the hot wallet or the exchanges for the activity of traded daily. This is to ensure the compliance of the boards, clearing house, and custodian as part of helping to enhance our asset security, and of course goes to the trust of our consumer for the consumer protections. This integrated structure enables supervisions across the entire trading value chain rather than focusing solely on individual institutions. As a result, it strengthens governance, enhances transparency and accountability, mitigates the operational and settlement risks, and ultimately provides stronger protection for customers. Beyond establishing a comprehensive regulatory framework, OJK also adopts a risk-based supervisory approach, as I mentioned earlier, to ensure that the digital financial asset industry and agent develop in a healthy, transparent, and accountable manner with what we call aligned with other financial institution entities. Our supervisory framework combines our off-site supervision, on-site examinations, and oversight of anti-money laundering, CFT, CPF compliance. We also have joint audits with our FATF agency or PPATK conducted to our several exchanges annually. Our off-site supervisions is conducted through the analysis of reporting submitted by the market participant. We also have what we call it direct API connection to the boards for us to be able to see and lively monitor the activities within the market. OJK continuously monitor the market developments and identify potential risks at an early stage. Complementing this, as I mentioned just now, we have on-site supervision that carry out through both routine and ad hoc examination to assess operational activities, governance, and regulatory compliance. In the area of AML, OJK, as I mentioned just now, we always work closely with PPATK, our FATF agent, analyzing suspicious financial transactions reports. Our supervisory approach is further strengthened by a three-layer monitoring mechanism. The first layer, trading activities take place at the licensed digital financial asset traders, which interact directly with consumer. In the second layer, we have the market infrastructure interrogated through the board's clearing house and custodian, which provide greater transparency, supporting transaction settlement, and ensuring the safekeeping of consumer assets. In the third layer, OJK work closely coordinating with relevant ministry and government agency, Bank Indonesia, Ministry of Finance, FATF agency to address other cross-sectoral issues that require a broader regulatory response. Together, this integrated supervisory and regulatory framework enables OJK to oversee the digital financial asset ecosystem holistically, strengthening market integrity, enhance risk mitigation, and ultimately providing greater protection for consumers. As innovation continues to reshape our financial structures, consumer protections remains one of our priorities. We believe that public trust is the foundations of healthy and sustainable digital financial asset ecosystem. To build and maintain this trust, our consumer protection framework is built on three key pillars. The first pillar is transparency, that consumer must have access to clear, accurate, complete, and non-misleading information provided by the market players to provide them before making any investment decision. This enables them to become clearly and better understand the characteristic and the risk of the products or activities they are engaged. The second pillar is the system security. Market participants are required to implement robust cybersecurity framework and measure protect their system from unauthorized access and comply with internationally recognized information security standard to ensure the resilience of their digital infrastructure, and providing not only during the first implementation of the transaction, they have to do what we call it fraud detection system. KYT is something that must that we oblige every market players to do the same. The third pillar is, of course, the protections of the consumer asset itself. To mitigate operational and cybersecurity risks, thus we require the use of licensed custodians, mandate the majority of consumer assets, 70%, as just mentioned before, to be stored in cold wallets and limit the use of hot wallets only for operational purposes. However, consumer protection goes beyond regulatory alone. We also provide accessible mechanism for consumer to obtain information, submit complaints, and seek assistance whenever issues happen. Through OJK, contact 13157 and Consumer Protection Portal application, APPK, consumer able to access information and lodge their complaints. We also work closely with relevant ministries and agencies through the Illegal Financial Activities Task Force, Satgas Pasti, to prevent and combat illegal financial activities while strengthening our public awareness. In addition to that, we have established Indonesia Anti-Scam Center. It brings together regulators and the financial industry, including our police and our other institutions to accelerate the handling of fraud cases and minimize losses suffered by consumers. Together, this preventive and responsive measure help us ensure that the innovation is accompanied by strong consumer safeguards. By combining a robust regulatory framework with effective complaint handling mechanism, we seek to foster a digital financial asset ecosystem that is not only innovative, but also trusted, secure, and sustainable until the future. Next, while regulation, of course, provides certainty, it should never become a barrier to innovation. We believe that innovation should be encouraged, but of course, it must develop with responsibility. This is the purpose of our regulatory sandbox. We have our control environment where innovative business model can be tested before being introduced to the broader market. The sandbox is not only a testing ground for new ideas, it also provides innovators with an opportunity to refine their business models, better understand regulatory expectations, and strengthen their operational readiness before commercial implementations. In a year, through the process, of course, participants are expected to demonstrate their sound governance, effective risk management, robust cybersecurity, and information system reliability with strong consumer and personal data protections, as well as compliance with our applicable regulations. So far, several innovative business models have successfully completed within our sandbox process, including we have gold tokenization, we have securities tokenization, property benefit tokenization, and most recently, a rupiah-based stablecoin. What is particularly encouraging in these innovations that they are developing in isolation. Instead, they demonstrate the importance of collaborations across financial ecosystem. For example, within gold tokenization, it involves collaboration with our Pegadaian, the institutions, as the custodian of the underlying physical gold, so 1 and 1. 1 unit of gold and 1 unit of the physical assets stored in Pegadaian. While the securities tokenizations brings together investment managers and custodian banks as part of the overall business model. This reflects an important shift in how financial innovation evolves. Rather than operating within individual sector, innovation increasingly relies on collaborations across different parts of the financial industry. Through this regulatory sandbox, OJK seeks to ensure that innovation not only move faster, but also develop on a foundation with sound practices, sound governance, effective risk management, and of course, as the priority is the strong consumer protections. Looking ahead, our technological achievements will continue to give rise to new business model. We invite new forms of digital financial asset. Innovation may evolve. Our regulative framework must catch up and evolve alongside with it, ensuring that these innovations can flourish while preserving our market integrity, financial stability, and public trust. Of course, to support these objectives, we continue to strengthen and refine our regulatory framework. Most recently, we expand our scope to cover products and activities that share characteristics with conventional financial instruments, including digital financial asset derivative. This reflects our commitment for ensuring that innovation develop within a clear and well-defined regulatory framework. At the same time, we continue to strengthen this role of market participant across the ecosystem. A healthy and resilient industry depends not only effective regulation, but also strong governance, sound risk management, and strong culture of compliance across the whole ecosystem. In addition, we are developing a regulatory framework for tokenized assets. We believe real-world asset tokenization asset has the potential in the future to unlock more and more new investment opportunities. It improves the efficiency of asset utilization, contribute to deeper and more inclusive financial markets, and as with every innovation, the development will be guided by clear principles of prudence, consumer protections, and the market integrity. Ultimately, all of these initiatives share a common objective: to provide legal certainty for both industry players, participants, and consumers, while of course fostering an ecosystem where innovation can flourish safely, responsibly, and again, in sustainable manners. Ladies and gentlemen, digital financial asset will continue to create both new opportunities and alongside challenges. Technology will continue to evolve, business model will continue to emerge, regulatory must evolve, of course, alongside to remain relevant in rapidly changing landscape. But of course, building a trusted digital financial ecosystem is not the responsibility of us, the regulatory alone. It requires, of course, the close collaborations among regulators, industry players, academia, associations, ministries, governments, all the stakeholders to ensure that innovation develops responsibly and delivers meaningful value to our society and economy. Ultimately, the success of the digital financial asset ecosystem should not be measured solely by transaction volumes or the number of users. More importantly, it should be measured by the level of trust that we are building. The trust is earned through, of course, the sound practices and governance, adaptive regulatory framework, effective supervisions, and of course, our shared commitment to protect our consumer and preserve market integrity. Building a sovereign, high-integrity, adaptive national digital ecosystem that able to strengthen our national competitiveness, stimulate, of course, deeper market developments, and enhance the well-being of society. With this foundation in place, we are confident that Indonesia can continue to build our digital financial asset ecosystem that are innovative, trusted, and globally competitive. As we move forward, let us continue working together to ensure that innovation serves the public interest, strengthen our financial system, and contributes to our sustainable economic growth. Regulations built on trust, trust enables innovations, innovation drives sustainable growth. By this, I end my keynote today, and thank you for all your attention.